Guys, I'm back with another trade breakdown, and today I made $1,000 in literally probably like 4 minutes. It was super easy, and I didn't use a lot of money to make that $1,000. I'm gonna break down the entire trade for you from beginning to end to really just show you how you can do the same thing. All right, so if we go to, let's see, go to my Discord, we can see here the first trade was QQQ puts. I made $800, only put in 2,500. Second trade, I made $239 on IWM calls. So let's get into the entire breakdown. So for IWM, let's start there. This is the exact same setup that I showed you guys in the previous video. This is how I made $14,000 yesterday. So when we see price have a huge push to the upside, clearly that is unhealthy price action, right? So unhealthy PA. Now, when something like this happens, I'm telling you, you need to thank God, because this will make trading just become a hell of a lot easier. Because at this point, we know price is not going to do this forever. We have to retrace, right? What goes up must come down, and this is very unhealthy, so we can expect that pullback. So essentially, when we see something like this, do not get FOMO. Do not sit there and try to just catch a trend. Literally just be patient and just let the trade come to you. So this right here, and let's change this color to red. In this red box, here's our retracement. Okay, so what goes up must come down. This is unhealthy price action. Now, the third step within this is we just have to let price find its consolidation area. Okay, so here in blue, that is the consolidation area. And then at that point, all we have to do is just look at overall structure to see if price is bullish or bearish. Now, obviously with this, if we look at a higher time frame, IWM overall is bullish. So therefore, we can assume price is going to continue with the trend and just go for the most recent high, which is literally right here, just like this, okay? So as soon as price started consolidating and we broke out of this consolidation range, literally just waited for another retracement back down, and then I just caught this push up right to break this high. And that's how I caught this move on IWM. And I mean, for me, today I wasn't trying to trade a lot and make a shit ton of money. I literally was just trying to make $500 to $1,000 today, because I made a bunch of money yesterday and I don't want to do too much, and I just really wanted to relax. So that's the IWM trade. That's how I made that money on that one. Now, continuing on to QQQ, this one is a little bit more tricky, and you may be a little confused, but I'm gonna walk you through it, okay? So here you can see we had a huge displacement to the downside. All that means is a very big push down, okay? So as I said before, this is unhealthy price action. So we have to understand that overall, price is not going to just continue down forever. We have to have some sort of retracement. Now, for me, I am very technical when it comes to like fib settings and things that I like to use for my trades, more so like amongst entries and everything like that. So for me, when we see a huge push to the downside, I like to use this 0.5 fib setting. So at this point, if price retraces back to this and we continue lower, at that point, I can now infer that price should not break this high. And if we do, we can expect price to move higher. But if price can't even break past the halfway point of this displacement, it's clear as day that price is going to move lower. So that is why I took puts here and had my stop loss right at that high. So if I was to lose on this trade, this is a 40-cent stop loss, I might have lost like 5%. So I was willing to risk 5% on $2,500. And then my target for this is just the break of the most recent low, which was here. So as soon as price broke that low, I caught it with the momentum and then exited. So when you're in puts, when you're in calls, and price is going your direction with a lot of momentum, you want to sell with the momentum. So for example, you don't want to wait for price to get to the bottom, pop up a little bit, and then pop down and then to sell, because the fluctuation of your contract is going to be all over the place, right? This contract could have been worth $180 here, and then maybe after we popped up and then moved lower down here, it might have been worth $172. You just left money on the table. So it's always important to sell with the trend. So that is literally the full entire breakdown of those two trades. As you can see here, here's a diagram. Big push down, push to that 0.5, and essentially just expect price to move lower if we cannot break that 0.5. And this is literally just the trade that I caught here. Just like that, and then we sold with the momentum, okay? So, I mean, to me, this was a very clear and simple trade breakdown. I hope you enjoyed this video. As I said before, I go a lot more in depth within my mentorship, within my signals group. Now, if you want to join either one of those, just hit the link in the description, fill out the short form, and my team will reach out to contact you to help you get in. I'm telling you, it's something that's going to change your trading career, because you can see how easy I hit these trades all the time, and there's no reason why you shouldn't be able to. So I hope you got some value from this video, and I will see you guys in the next one. Hope you guys have a good weekend.